Shares of the EV maker Tesla are rising in the after hours by nearly 4.5% after reporting their Q4 results. Now, you're probably thinking the results over at Tesla were probably pretty good, but as we get into this print, you'll see things are actually quite ugly and this company missed pretty badly in terms of expectations. But as we know, as it always is with Tesla, it's not so much how the previous quarter went, but more so how the next couple of quarters, really over the next couple of years, how those are supposed to go. And of course, the all-important Elon Musk will get on the conference call and sing that sweet music to investors, and really that's what matters over at Tesla anytime they report their earnings. So we have a lot to get into. We'll take a look at the numbers, the financials, the fundamentals, also the valuation over at Tesla, but also the important comments made by Elon Musk on that conference call. And then we'll take a look at it from a technical perspective. You're definitely off your highs that you recently made over at Tesla at the beginning of the year, but you're still very, very elevated, and you've seen that significant rally over the past 1 year. In fact, that rally of nearly 104%. Hey guys, hope you're doing well out there. It's a busy earnings day, it's a busy earnings season, and one of the more important companies to report out there is Tesla, not so much from a market cap or a numbers perspective, but from a general vibe of the market. This one really dictates how the general vibe of earnings season really is, in my opinion. Now, you did have shares slide on the day, roughly 2.5%. Even over the past week, you've seen shares slide by nearly 7%. And so this 4% move in the after hours really is just making up for some of those losses. Now, keep in mind, the valuation on this one would absolutely make your head spin if you tried to understand it, north of 100 times, not just on a trailing basis, also on a forward basis as well. So certainly you're not picking this one up at these levels because you feel like the valuation is all too compelling. You're picking it up on the hope and the future prospects that Tesla is able to deliver on all of their long-made promises. Now, revenues in the most recent quarter came in at $25.5 billion. That was good for just, and I say just 2% growth year over year. What is more important is the fact that this company actually missed on those expectations by $1.4 billion. That is a huge miss. The average estimate on Wall Street was close to $27 billion. This company coming in underneath $26 billion. So Tesla revenues certainly did miss and certainly did come under expectations. Now, a lot of that can sort of be telegraphed simply because this company does tend to give us those delivery and production numbers roughly 4 weeks ago. And so you could still pretty easily decipher what revenues will be. But the important thing is average selling prices on their vehicles continue to slip. And that is what is causing that is what's causing revenues to be pretty flat year over year and actually down from average analyst estimates. Now, you also got a miss on the earnings side by nearly 4 cents. Not as bad, but you did have more margin contraction over at Tesla, and we'll see that maybe the margins didn't bottom out sometime earlier on in this year, and maybe they have further room to slip. Now, we'll also take a look at it from a CapEx perspective. You're seeing quarter over quarter CapEx go actually down from $3.5 billion last quarter to now at $2.8 billion. You're also seeing free cash flow slip on a quarter over quarter basis. So keep those things in mind. The financials over at Tesla, at least from this most recent quarter, certainly weren't great. Now, as we look ahead though, that's where the excitement and the optimism comes in for this company. From a top line figure, you're expecting this one to grow in that mid-teens throughout 2025. In Q1, expecting close to 20% growth, and then ramping, basically staying in the mid-teens throughout the next subsequent quarters. But keep in mind, if this company's average selling prices continue to slip and perhaps demand stays relatively weak in a higher interest rate environment, then they can perhaps be coming in underneath these expectations, and then that will slip on your year over year growth rates, again hurting this company's future outlook. And consider the fact that you had a nearly $1.5 billion miss on this most recent Q4. That should tell you that the upcoming quarters will likely come in here and be readjusted by estimates on Wall Street. Now, the thing is though, on the earnings side, you have a bit faster growth expected over at Tesla, as they had very tough comps in 2023. But now that you have the weaker earnings of 2024, the comps become a little easier. And so you're seeing that faster growth on the earnings side. Also, the hopes and the expectations are that this company is able to keep those costs, or at least on the operating side, in check, and able to once again tick back up on those operating margins. Now, we don't get concrete outlook in terms of a revenue or an earnings figure from Tesla, but they do provide us with general commentary, general outlook for the rest of the year. So they do say that, first of all, they see energy storage deployments to grow at least 50% year over year in 2025. So that's a good thing to see. That we'll also see it from their financials. The energy storage side of their business continues to be very, very strong. They also do expect the vehicle business to return to growth in 2025. Of course, we got 2024 as the first year on record that Tesla actually declined on vehicle deliveries. Roughly, I believe 1% was the decline year over year. They delivered close to 1.8 million vehicles for the full year. And so they're now once again expecting that rate of growth to accelerate into 2025 for the vehicle business. Now, there is some uncertainty there, and it could depend on the autonomy efforts, the production ramp, especially also on factories, and of course, the broader macro environment. This company, a little bit more sensitive to your interest rate environment compared to other mega cap techs, and certainly that does affect the business over at Tesla. Now, from a cash and balance sheet perspective, you'll see this company still actually has a very strong balance sheet, and they'll continue to maintain that, and it'll help them during uncertain times moving forward. Now, they do expect profits down the road to be accelerated due to the fact that they have a software business, they have AI, and they have fleet-based profits, at least coming sometime down the road. Currently, a lot of their hardware business isn't very high margin, as we clearly know, and so they're not generating a lot of that profits. The hopes, though, are that hardware business will begin to turn into an AI and software related business as well. And certainly we should pay attention to how demand is for full self-driving. Now, probably the most important part of the outlook is the product roadmap. And to that, they say plans for new vehicles, including the more affordable models, remain on track for the start of production in the first half of 2025. These vehicles will utilize aspects of the next-gen platform and will also be produced on the same manufacturing lines as our current vehicle lineup. So that's nothing new. We've known that since pretty much a couple of earnings ago that they are looking to make those more affordable models, and those will be produced on the same manufacturing lines. That should help costs over at Tesla. Now, they do say their current manufacturing capacity should be close to 60% growth from the 2024 production volume before they need to invest in new manufacturing lines. So they have more than enough manufacturing capacity. They just need to fully utilize it, and their production volume should grow roughly 60% before they need to actually invest more capex into building out more manufacturing lines. And of course, the purpose-built Robotaxi product known as the Cybercab will continue to pursue revolutionary unboxed manufacturing and is scheduled for volume production starting in 2026. I think Elon said that production will begin near the back half of this year, but that'll be just few and far in between. The volume production still expected to be on track for 2026. And of course, Elon Musk gets on the conference call and talks up the epic long-term potential and the full autonomy that is expected to roll out, I believe, in Austin sometime later this year. And he said the preparations are underway across the existing factories for the launch of new products, including that more affordable model. And along with that, you also have a Model Y refresh currently going on, and production for that new Model Y is expected to ramp and begin deliveries later in Q1. And then during the earnings call, he also said that the company is doubling down on autonomy, and it will see more payoffs from investments in AI. Of course, he also had to mention that there's a path for Tesla to have a market cap more than the next 5 most valuable companies combined, and that the potential is epic in 2026 and ridiculous in 2027. So of course, you get these euphemisms from Elon Musk. Pretty much every conference call, he tries to do his part of damage control in terms of the earnings call. And of course, you have to take that with a grain of salt. Some of that is just him being Elon Musk. Some of that is him trying to inspire and probably motivate employees at the company themselves. And the thing we know is that sometimes he tends to be a bit early on terms of the timeline, but usually the things he says do tend to happen, maybe just over a longer period of time. Now, he also noted that the autonomous fleet could see vehicles utilized at an average of 55 hours per week versus the current average of vehicles being utilized roughly 10 hours a week. So I think this is actually really interesting. The more usage of a vehicle, you can probably get a really good fleet network with that, because again, if you have a lot of cars being utilized over a long period of time, the network effect of a fleet really begins to take place there, and you have a lot more options, you have a lot more availability as well. In terms of rolling out FSD, he said Austin will see an initial launch of unsupervised full self-driving in June, and then expects California and other states to follow. So I would pay attention to how the FSD rollout, the unsupervised FSD rollout goes in Austin, because again, if you have maybe issues that arise here, that could delay the rollout of FSD in California, perhaps other states. But again, if this goes really smooth, that could accelerate the timeline over at Tesla. So a lot is baked into how the unsupervised FSD, how autonomy really takes shape over the early couple of months. And then he also mentioned in the Q&A that the other automakers are interested in licensing FSD. I believe he also mentioned this in the previous earnings call, and that is certainly a potential for Tesla down the road to make money. Perhaps other OEMs will license out Tesla's FSD. The tricky thing though is they don't have the same hardware that Tesla has, and so it'd be interesting to see if Tesla has to modify that FSD software for other OEMs, or will it simply be sort of universal that as long as the other OEMs have enough cameras and enough hardware capabilities, they'll be able to use that FSD straight out of the box. Now, he also pointed out the huge upside for the Optimus humanoid robot, but he did tamp down expectations in terms of a production ramp for 2025. So I believe Optimus has actually huge potential, probably actually bigger potential than FSD in my opinion, simply because of its huge use cases, especially surrounding manufacturing. And so I do certainly believe in the Optimus product. I think the timeline on it is certainly a bit too aggressive. And I think the first use cases are, like we know, in Tesla's own factories. I think the best use case of it is actually to reduce costs, reduce manual labor, and improve throughput. And I think that's where Tesla is seeing the best benefit. I think as it comes to selling Optimus maybe to other companies, that's still probably a ways away, simply because they'll probably take a while to get to volume production for Optimus as well. And then lastly, in terms of vehicle production and deliveries, Musk did note that a battery pack constraint is affecting the vehicle production and deliveries, but he didn't provide, of course, specific full year guidance. So maybe there's a bit of battery pack constraints there affecting some of the deliveries and production numbers over at Tesla. But all things considered, you had a pretty weak quarter over at this company, and Elon Musk went on to the conference call and really talked about the future over at Tesla the next couple of years, next couple of quarters, and that is pretty good for investors as they get to put aside the previous quarter and really look ahead over at this company. Now, auto revenues year over year did decline roughly 8%. A lot of that, again, is telegraphed due to the fact that this company does provide those delivery numbers roughly 4 weeks ago. The thing to note, though, is average selling prices continue to decline, and so that's why your automotive revenues decline faster than your delivery numbers. On top of that, you did see very fast acceleration into your energy and storage business, up nearly 113% year over year. The services business also continues to be a bright spot, but like we know, currently the bread and butter for Tesla is still selling cars, selling Model Ys, selling Model 3s. That is still what drives the top line over at this company, and whenever that's weak, you'll see just 2% revenue growth for the most recent quarter over at Tesla. On top of that, your gross profits are declining roughly 6% year over year, and your gross margin actually declining as well, down 138 basis points. So last year you were closer to 17.5%. Now you're underneath 16.5%. Even quarter over quarter, pretty substantial declines, as in Q3 you were closer to 20%. And so we actually thought that perhaps Q1 of 2024 was the trough in terms of gross margins, in terms of operating margins. Seems like Q4 this year may actually be the trough, or maybe they have another 1 or 2 quarters of struggling operating and gross margins. Now, from an operating margin perspective, again, just 6.2%. Last year, you were closer to 8.2% in the same time, and last quarter, you were at nearly 10.8%. So last quarter was actually surprisingly pretty strong. Now you come down to net income and you see this negative 71%. Now that does look pretty rough on paper. Keep in mind though, last year they did experience a one-time tax benefit, and so your net income last year was actually more inflated than it really should be. Now that non-recurring benefit is really stripped out, and so your net income is actually more normalized, actually pretty decent on a quarter over quarter basis. You went from 2.1 up to 2.3 billion on your GAAP net income side. Now, in terms of the CapEx, this is something this company continues to invest heavily in. They have a huge cluster of NVIDIA GPUs. They, of course, are continuing to production ramp and build out more gigafactories, especially for the Tesla Semi and the Cybercab. And so you're seeing that CapEx continue to tick up year over year, up 21%. But that's not necessarily a bad thing. Certainly, CapEx at a time like this, where investments into AI are pretty heavy, is actually, I would say, a pretty good thing. And despite that, you still netted out nearly $2 billion of free cash flow. That was a decline year over year, But like we know, currently Tesla isn't in a position to really be focusing on buybacks or dividends, certainly, or profits really to that extent. They're really focused on rolling out new products, making sure production ramp is there, and especially focusing on bringing costs down for the company, at least on the cost of goods sold. And we know the cost per vehicle continues to come down. In fact, in the most recent quarter, came down underneath $35,000 per car. Now, from a technical perspective, look, we know this quarter wasn't great, but that's not holding the stock back from rallying close to 4% in the after hours. You are still well off your all-time highs, close to $480. But keep in mind, you have rallied pretty significantly just since October. I mean, start of October, you were closer to $200 a share. Now you're at nearly $400 a share. So just over the last couple of months, you've seen that nearly 100% rally in shares of Tesla. And so I wouldn't be surprised if shares continue to sort of chop around sideways. I wouldn't really expect another monster move higher. There was nothing in these financials, nothing really on the conference call that Elon said that would tell me that there's going to be another huge run up, because there's nothing new or nothing that we haven't heard from Elon before. So I actually would expect shares to sort of chop around sideways, pretty much in this range from $350, call it up to $450 a share. Now that is a pretty wide range, but shares of Tesla tend to also swing pretty wide as well. So could be certainly possible we go sideways. You could also just see a retracement back to this uptrend. So you could come all the way back down to the 300s, maybe in the 290s, depending on how fast you make that move. And keep in mind, at that time, the panic will certainly begin to set in for Tesla, but keep in mind, it would still actually be in an uptrend. Even if it retraces all the way down to your $300 mark, it's actually still considered to be in an uptrend. And so at that point, you could absolutely look to step into shares of Tesla. What I actually would prefer is if shares just continue to chop out sideways for pretty much the remainder of the year, especially the valuation will begin to come in, make a lot more sense. Still wouldn't be great, because it's not like they're expected to produce huge profitability in the upcoming year, but at least would be more reasonable from a valuation perspective. And so I wouldn't be surprised if shares sort of just move sideways along through the year until you sort of meet back with this upper trend in shares of Tesla. That was my take on shares of Tesla. I wouldn't be overly excited to step in at these levels. I think you could see some sideways consolidation with this name over the next couple of quarters, and I don't think that's necessarily a bad thing. The thing I would watch over at Tesla is how the autonomy rolls out in Austin sometime in June. Would follow how the market is reacting and receiving full self-driving over at this company, and really what the reviews are in terms of its push towards autonomy. That was my take on shares of Tesla. Certainly from a valuation perspective, doesn't make sense, but if you're holding shares of Tesla, if you're looking to buy shares of Tesla, you're buying it with the hopes and the dreams that the future will come to fruition and the things Elon Musk is promising will eventually take place. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.